We are live today. We're going to talk this guy right here, U.S. dollar. Uh, Take a deep dive in. Uh, Fed's coming out, well, Fed's policy decisions are coming today. Maybe a stimulus package by the end of the day. Um, Fed gonna give guidance on their bond buying program. Uh, Bitcoin's popping off. U.S. dollar index is down at 32, 33-month lows. So we're going to take a deep dive into the dollar and talk about it, I guess, from an outlook standpoint, what it means to your portfolio, um, and some other things as well. So I guess we'll jump right in with the stimulus package. $900 billion stimulus package being proposed, I guess, by the uh, really by both sides of the aisle in
Yeah,
Congress.
pretty
Look,
bipartisan right now,
yeah,
I
looking
would
to
say.
push it through, including direct payments to to families or to people directly.
Yeah, it
But
sounds like
leaving
about the same thing as last time.
leaving out some state aid though. So they're not going to be funding any revenue shortfalls for city and local and state governments with this one, which I'm okay with, honestly, as long as we're kind of flowing money into people's pockets who are then going to go out there and spend it again. It should be all right in the long
Definitely.
run, or I mean, maybe not all right, but uh, it'll do
I'd
compared
rather
to.
see that. I'd rather see that
Yeah,
than zombie company.
yeah, I agree. So I guess, what are your thoughts on the stimulus? What do you think it does and means for the dollar going forward, from here going forward?
Honestly, we've already crossed the road of printing, so but I think it's just showing more and more that the dollar isn't what people think people a lot of people don't realize that the dollar really is just nothing at this point. It's fiat. It's literally fiat money. It's not backed by anything. It's backed by the good standing faith of the United States government and their authority to tax people.
Yeah,
Which,
and I think
that's a
that's a
pretty reputable thing, honestly, at the end of the day. It's not the worst thing in the world, but we're definitely hurting our own authority in a way.
yeah. We'll get into kind of the dollar as a reserve currency and stuff like that in a little bit, but I think what and the having the full faith and credit of America versus some other countries definitely holds that reserve currency status a little bit. But I think
Yep.
what you mentioned in terms of kind of we've gone over the hill in terms of printing. So really, if we were to stop printing right now, it would do more detriment to the economy as a whole than it will to continue to print the
I,
money.
I honestly, I kind of believe that in a way right now.
No,
I
yeah.
that if I that these direct payments they're needed right now in a way.
Mhm.
I wish they weren't needed. I think if we would have done the first lockdowns
Yeah.
in a better manner, then we maybe would have had to go to this point that we're at now. But at this point, I think put some
No, I
money
think
in people's
it's
hands that actually need it.
you've probably heard it many times. If the first lockdown worked or was done correctly, we wouldn't need a second one. But
Exactly.
I kind of want to go back and touch real quick on that whole idea of, and I think a lot of people lose sight of this or just aren't aware of it at all. The fact that the dollar's decoupled and no longer on the gold standard, no longer one for one backed by
And it hasn't been
by gold, hasn't been for
for 50
30 or
years.
40 years now, 40 years
Yeah.
now at least. Yeah. But that's another thing. Printing money doesn't necessarily mean that uh, you know we got the printer running and it's printing out sheets and then cutting them into dollar bills like this.
Yeah.
It's digits on a board that are going up or down based on the Fed saying we're going to put a capital influx in based on the Fed buying bonds and such. So that's where the Fed's guidance on their bond buying going forward. What is it, about 120 billion a day that they're buying in terms of treasuries? So the
Yeah.
guidance on what they're going to do there is going to affect uh, the dollar and and its value, uh, I guess worldwide, really, uh, going forward. Uh, what are your thoughts on what the Fed might do in terms of guidance, in terms of bond buying? Do you think they continue to buy at the rate they are, slow down, speed up?
Well, right now they're gonna have to keep buying at the rate they are. I
Mhm.
I, I think too. They once they start slowing down, we're gonna start seeing cracks in the market. They basically already come out and said they're backdropping this market that investors need to go take risk.
Mhm.
So
Well, that
I think they
and
will be
that's
standing there,
that was
and
some. Go ahead.
they're gonna institute some yield control. 100%. They're gonna raise the back rates, the
Mhm.
long term rates, because there's no way the natural rate of money, like, you know what I mean? The natural, if I come to you for a personal business loan, you're not going to give me a business loan at 0.75%. It's
No.
going to be at least 5, 6%, like
Mhm.
if you went to some private lender or whatnot. So like the real natural rate of money is definitely higher than what the Fed is doing right now. So I
Mhm.
think those rates are going to have to converge. I mean, maybe the natural rate can come lower than what it is, but it's not coming down to the where the 30-year bond is right now, for that's for sure. The
Yeah.
30 years coming back up towards it.
Yeah, and I guess it's a good segue into that whole reserve currency, because you talk about having to implement some yield control. We think about Chinese 10-year treasuries. U.S. 10-year treasuries are what, 0.9%, 0.9% right now.
Mhm.
Chinese treasuries are 3.3%, 3.4% on the 10-year. So where generally the fact that we've been printing has kind of been offset by the fact that foreign national banks and foreign governments and foreign firms, large firms, are continuously every day buying S&P 500, buying TLT 10-year treasuries, and that's kind of held the dollar in some respects, as we've printed at unprecedented rates. Where there's riskless yield in China at 3.3 or 3.4% versus 0.9% in the U.S. dollar. Uh, Over the next few months, it's going to start to kind of eat into the flows into America. It can't not eat into the flows. When there's
No doubt.
risk free yield
But at
out
the end of the day,
three times
is
what
that
you're.
money is that money risk free though? Because these companies are taking into the fact of inflation too. They know getting a 0.9, they're not winning. They know they're not making money on that at the end of the day.
Mhm.
Because inflation, that's I wanted to get into that a little bit too when we were discussing how we came off the gold standard. Inflation's a made up concept. Like, we made that up. And at the end of the day,
For non-real
all it
assets.
does
Yeah.
all it does is hurt savers. And the person who's a saver is your average person. It's your person that works 40 hours a week, they're 9 to 5, that makes the average, if it's $40,000 a year, which, I mean, back then it was a lot lower, but it may have been a lot lower, but at least their money was backed by gold. And
Mhm.
they were actually getting paid to save 5, 6%, you could, in a savings account. And we're never gonna see anything like that again.
Yeah, I mean,
And
in
with
reality.
inflation, it's just eating into everybody's assets. I mean, not everybody's, the top 1%, we start moving stuff into other assets, and
Mhm.
people that understand that win. And so is it the game, or should the rules be changed? I don't know. I'm going to keep playing the game till the rules are changed though.
Yeah, without a doubt, without a doubt. So I guess with that said, do you think there are real threats to the U.S. dollar in terms of being the reserve currency of the world?
Definitely. Definitely.
What would overtake it then? Because I'm going to disagree there, and I'll push back later. But what would overtake it, or what would?
Right now, honestly, the British pound.
I don't see it. But that's you just think the British pound is going to overtake it, or could
Yeah,
overtake it?
I could definitely see it overtaking it. The British, they've been around for 700-800 years as an empire.
Yeah,
Like,
but
and they've been
the
around
reality
longer.
is
They've been around longer than that. But I'm talking about as a dominant empire. And at the end of the day, we're still a baby country, and it would have been a lot better if we didn't step over this bounds that we're in now. Because, we were discussing the M2 graph and the M1 graphs the other day, and they're just disgusting. They're parabolic.
explain to people what that is, because they're not going to know what the M2 or
Well,
M1 is.
yeah. So, M0 is your cash currency, just cash, anything you hold in cash. Your M1 is your cash currency plus your checking account plus your money market accounts,
Liquid.
and any time deposit under $100,000. So any CD under $100,000. So
Mhm.
that's basically liquid money.
Mhm.
The your most liquid besides cash, and then M2 is that including mutual funds and I believe brokerage accounts.
Yeah.
So you get more and more liquid. You get less and less liquid as you move on,
Mhm.
but obviously the number gets bigger because there's more assets. But it is wild to see it go. Say we were definitely heading at a rate of 2 to 3% a year, like inflation is, and this year, like I said, we printed 22% of our GDP's dollars this year.
Yeah.
22%.
Yeah.
Like
But
the Fed's balance sheet is up like 80%.
yeah, and there's two sides to that. So I guess a comment on that the Fed's balance sheet is the reason that we'll never see rates in the 5 or 6% on the low, or in checking accounts or low yielding accounts, because if rates were up in the 5 or 6% on those accounts, the Fed's balance sheet would completely blow up and everything else would follow. With
Yeah, but
that said, though, I do have to push
we run
back.
on fiat. That's because we run on fiat money, though. If we
Yeah,
ran on a gold standard, there wouldn't be that inflate. The only rate of inflation there would be is how much gold can we pull out of the ground.
mhm. See, I guess I look at it as I see the dollar continuing to decline in the months ahead, but that just in terms of a number on the dollar index. In reality, 90% of foreign exchange trades are made using the U.S. dollar. 62 or 65% of foreign currency holdings are all in the U.S. dollar. And like we talked about, foreign banks, foreign governments are all every single day having to exchange into U.S. dollars to buy the S&P, the TLT, things of that nature. So though the dollar index may go lower, I don't necessarily see any real challenger to the dollar in terms of a new reserve currency in the world. But that's worldwide. I think for Western countries, Europe, there's absolutely no challenger for the U.S. dollar. But you're going to see the yuan, the yen in the next couple of years gain steam in the Asian area, uh, because China is growing at such a rate that people are going to want to put money into the Chinese economy, especially in those Asian countries. But also because of, like we talked about, the yield that that's going on there. Typically, as money flows into the U.S., continues to drop yields, raise stocks. So as you go and flow money into China. And let me ask you, do you think that's
I don't think money's going into China anytime soon.
do you think that's a
We're
false rate
kicking.
or I guess a government propped up rate at 3.3%? Or
Yeah, 100%. It's fake. It's fake like their companies.
Mhm.
It's fake like their companies.
Mhm.
Honestly, did you call it? Yeah, now that we're on this, did you see that we're trying to kick off Chinese companies off the exchanges?
They're already starting. They're already starting.
I know, like they already started with some of them. It's
Mhm.
crazy, which honestly I think is a great thing because it's gonna put Chinese companies at such a disadvantage to American companies. Like that might have been the route we should have gone before tariffs, even possibly. Like
Yeah, I mean,
that's a kick in the nuts. It's a kick in the nuts.
it's gonna require them to actually report properly or report accurately instead of just fudging the numbers. Uh,
Because
and
like you
and
said, I think it's gonna hurt a lot of foreign investment that would have been invested through our markets
in
into
Chinese
China.
companies through the
Yes.
yeah.
Like I think, don't get me wrong, there's still going to be brokers in Thailand buying up whatever, doing their
Mhm.
thing. But I think this definitely hurts Chinese companies and even the yen. See, I don't see the yen as much of a threat as Europe. I see Europe as the bigger threat to us because Europe's just so much more established too, I feel like, than China
Mhm.
in the fact that Europe's not going anywhere. I mean,
Yeah,
we're
but
not
there's
going
also
anywhere
there's
either.
also there's also
Or-
no push from Europe or no uh I think and I think the writings on the wall, you can see it clearly that European economies, A, they're struggling, and B,
Oh, they're struggling.
they respect the US as being that they have no problem with the US being that reserve currency, with the
But
U.S. being number
but
one.
what about in like
in terms of-
5 years? This is what I was gonna ask you. Like, if you're another country other than the United States, why are you gonna sit here and let your holdings get hammered like that?
What do
Like,
you mean?
at some point, they're gonna if we just keep printing, like,
Mhm.
I mean, obviously, like, we're gonna have to stop at some point. Like,
Yeah.
theoretically, I guess. Like, I don't know. We've opened the Pandora's box, but so like, if we don't stop printing, let's say for theory, why are these countries gonna sit here and just take that from us? Eventually, I feel like there's got to be a snapping point. There's definitely a point where like they're gonna sit here and just suck it up, and that could be for another few trillion dollars. It could be for another $100 trillion.
Yeah,
But at some point,
as we continue
like,
to, I,
they're gonna
I
find something else.
yeah, I agree,
Whether
but
it's go back
to
to
an
gold,
extent, as we continue to print, it's going to continue to just pump equities north, and for all those foreigners to get into U.S. equities, which are pumping off U.S. printing, they're going to have to exchange into the U.S. dollar.
yeah, but I don't. But what happens when the bubble bursts? When there is no more printing to be done, then, like, because there's a lot of foreigners that, of course, they buy U.S. equities and stuff too. But how many people do you know that come over and just buy houses just to buy them to get money out of China?
A lot.
They buy 30 million in houses.
Yeah.
Exactly. So, what happens when the bubble pops? Like, there's going to be another asset, whether it's houses, whether it's Bitcoin. I mean, I don't think it's going to be Bitcoin, but there's going to be something else, like gold,
Listen, no,
silver, like
I don't,
platinum.
and I'm not saying that, I guess
And the
we're
market will come
talking
back.
as,
The market will come back, like
yeah.
100%. I just feel like especially now, because
Mhm.
we've been on the longest bull run in history right now. And
Yeah.
we thought it ended. We thought it ended in March. Let's be honest. Everyone was pulling their hair out. Like,
Yeah.
everyone thought it was over, finally
Mhm.
over, but it's clearly not. The Dow's at 30,000, almost 30,200. Like, so still in full effect. Is it nearing its end? I think so. I really do. But when does it end? And when it ends, how bad is the drawback going to be? We might see other assets outperform for 5 years. Hard assets.
Yeah. Yeah. Well, that's, I guess, I'm, it's kind of a two-sided coin. It's I mean, do you actually want your money in cash, meaning this, versus the U.S. dollar being U.S. holdings? So to have U.S. holdings, you have to transfer into the U.S. dollar, which is going to maintain it as the reserve currency, but also just holding U.S. dollars because of inflation, because of the fact that we're printing so rapidly, means that you shouldn't necessarily just hold cash. So cash is trash, but liquidity is kind of paramount. So where can we hold capital in something that's liquid, something that's like currency or can be transacted like a currency, but isn't necessarily going to feel the effects of continued printing and things like that on it, like the actual physical dollar will.
That's a great question. And where that asset is, what that asset is, that's the dollar's biggest threat, is that right there.
Mm-hmm.
Whether that's an exchange, that's something on a stock exchange,
mm-hmm.
whether that's something in the crypto world.
Yeah.
I mean, look at North Korea. They're not allowed to transact in US dollars.
Mm-hmm.
They're not allowed to use them. So what
that's a very specific
cryptocurrency, they sell it and then they buy.
Mm-hmm.
Then they buy US dollars with that and make their transactions.
Mm-hmm.
So like,
and a similar thing with Iran.
Yeah, their military actually has a huge.
Yeah, go ahead and explain it. How they're basically not allowed to be getting U.S. dollars, but they are going through a process in which they're ending
They just mine the Bitcoin and sell it.
Mm-hmm.
And
simple as that, I guess.
Simple as that, It's like mining gold, except
Mhm.
anyone can do it.
Yeah.
So like, that's why I think hard assets are the play. 1920s, when shit was popping off, great 20s, best performing asset were the miners. Like the gold mines. Barrick Gold was actually the killer of the 1920s.
Yeah. So
we have a chance to play it again right now, I think, personally.
Yeah. So what it comes down to and what it boils down to is, and I guess I thought we were a little further apart than we really are. Maybe not, but the threats to the dollar as the reserve currency aren't necessarily real threats in terms of another currency overtaking the U.S. dollar. I mean, like
Yeah,
90%
I see
of
it
trades
more.
are involved in the U.S. dollar. It's a matter of what is going to overtake the U.S. dollar as a holder of liquid capital. So when
Now
the
I see it more
benefit
as
of
like
holding
this.
capital, or when the
Mhm.
benefit of holding capital in U.S. dollars declines so rapidly, uh, because the U.S. markets are still the prime spot, money's going to flow into U.S. dollars. But once it gets into those U.S. dollars and into U.S. markets, where is it being held in terms of liquidity? And
Exactly. Now
that's going to be in.
I think that's seriously gonna hurt the average American because I think people are gonna get the average American's still gonna get their money, either put it in the bank, do what they do with it. Some people don't even use a bank; they keep it in their freaking pillowcase.
Yeah.
And
Uh,
now so like these large institutions, like you said, exactly, they're gonna get the dollar instantly, like what we freaking do, instantly gone. It's out to an asset. It's either going into stocks, Bitcoin, something. It's not a dollar anymore, even though it's liquid. Like we were saying, we can get our money out any day we wanted. T and two, but for the average person, that now all these companies are just instantly dumping their dollars into an asset or into something. That's gonna hurt the average man, like we were saying.
yeah, because they
So
don't have the
people
capacity
need to
to. Yeah, they
people
don't
need
have
to
the
start positioning
capacity.
themselves. Everybody needs to start positioning themselves for a dollar drop. Definitely.
Mhm.
And for what, for the average person, that's probably latching on to lands, like at the end of the day, is trying to find a market that's not completely popping off right now, buy the shittiest house in the neighborhood and fix it up. And
Mhm.
you'll make your money back on that in the next 10 years.
Yeah.
And that might
I,
be for the average person, that really might be the better investment than risking it anywhere with paper assets.
yeah. Yeah. I don't disagree
I'm
there.
talking on the large bet. Like I'm talking large bet. Like someone, if someone who works 40 hours a week right now, they're 35 years old, they have like 100, 200,000 saved up. Like maybe considering going buy like mad property as much as you can, something like
Get that capital out of physical
yeah.
uh, uh,
And I
currency is
and for the average person, I don't even think it means throw it all in the market because, like we said, like like I was saying, it's a big bull run that we're at the end of. Like the downfall could definitely happen, and if you have a long time frame, screw it. Like then you're fine as long as you have the right advisor that's going to hold your hand and not let you sell. Then it's fine. Honestly, at the end of the day, because let's say you throw 200,000 and you lose 10% next year, but in 30 years it's going to be fine. Like you're still going to have made your money, but if you don't have that and you're gonna just have a weak hand and sell out, it might be time to go with some hard assets. Might be an easier play.
Yeah, and especially, I mean, the Fed has already hinted. I mean, they haven't given their guidance yet, but has already hinted that rates are going to stay, sub 2% really,
For a
uh,
while.
through 2023 is what they're saying. So,
Yeah.
I mean, you got 2 to 3 years of
And they said they're gonna
rock
let
bottom
inflation run.
rates.
With
I mean,
letting inflation run on top of that, it's crazy. And they
what can
said
they?
they're not gonna hold it to 2%, they're gonna hold it to a 2% average. It could run 6% next year, 7%,
Mhm.
which would just be I don't even honestly, I know what the effects are. Like theoretically, I know what the effects are.
Yep.
And I'm just scared to see it happen, quite frankly. You know what I mean? Like, I'm as interesting as it would be, and even though I'm gonna prepare myself for the play, like as everyone knows, I love the Bitcoin. I would just gobble it up. I buy more and more. So, like, as good as that would be for me, I don't want to see the average man just get crushed like that, especially by the dollar. Like, that's just not fair. It's different if you're out there speculating and you get crushed, but if you're just doing the right thing, trying to get through life, and you get crushed just because we've been printing mad money, that's just not fair.
So I guess, what do you think the Fed says in terms of asset purchases? Because if they slow asset purchases, it is going to push rates up towards
Definitely.
1%. Uh, is it likely that they slow asset purchases or no?
No, I don't think they're going to slow asset purchase, honestly. I think they're back in this market through
Mhm.
the end. I think they want people out there taking risk. They want people speculating right now.
Yeah, yeah. So that's interesting though that you say that, because typically risk on environments lead to upticks in the dollar. So if they're buying treasuries or buying assets in general, uh, and trying to force risk on,
Well,
in
they're
risk on
creating a larger
environment,
supply. Yeah, but they're creating a larger supply of dollars when they're buying treasuries. So
which is
definitely would bring
fostering
the
a
price
risk on
down.
environment.
Yeah, but which is also definitely bringing the price of the dollar down. You're creating
Hmm.
more of a supply.
Hmm. Hmm. I guess it turns to, and this is kind of obvious. What is that demand from foreign? A lot of it comes down to what is that demand from foreigners coming into U.S. markets, because uh, continuing asset purchases like that, it's not only U.S. folks holding these assets that are being purchased by the Fed. So do the assets continue to, once they're purchased and people get those U.S. dollars, continue to flow back into U.S. equities or U.S. treasuries again, or fixed hard assets? Where do they go
Exactly.
once
What
the
what if theoretically, let's say, what if the money stops? Not that it stops. Let's say it, instead of flowing into, I don't know, we start printing so much. What if it starts, like you said, what if it starts flowing into the Chinese market? God forbid.
what if? What do you think?
What if that we're screwed?
Mhm.
Like, we need to be at the rate that we're printing right now. We need to stay the world's reserve currency. There could be no question in our authority the way we're printing right now, which
Mhm.
honestly, I don't think the point we're at, I don't think there is yet, but it could also happen very quickly. I feel like if China wanted to start making it an issue.
How would they go about making that an issue?
How would they go back and making that an issue? The fact that we owe them so much money, so much money.
Yeah, and it's interesting though, because so much of, and people don't really factor this in. They say, oh, the U.S. owes China so much money, this and the other thing. I mean, greater than 50%. I think it's somewhere in the 70% range of worldwide debt. So debt held in other countries is all in U.S. dollars. So just
Yeah,
because we owe China a lot, there's a lot of countries that also owe us a lot that are in U.S. dollar denominated debt. So it does offset it somewhat, but I see what you're saying in terms of if they were to start calling on that.
well, at the end of the day, it just calls into the faith of the system. And at the end of the day, there I feel like if a majority of the people understood that cash is not backed by an absolute thing, except the faith of the government and the fact that they understood how much we're printing,
Mhm.
that people would have a serious problem with it at the end of the day. Like, a serious issue. Do I think a majority of the country will ever understand how they're getting screwed and how the people at the top are just eating off inflation?
Mhm.
No, probably not. They might never. But if it did happen, I think that is one of those things that could kill the trust. Like, that's what it all comes down to. I feel like a lot of it is the trust. Like, we all trust in the dollar at the end of the day. We put our faith in the fact that when we fly over to Europe and go on vacation, that our dollar is gonna hold stand and true and work. Or if we're in Canada, it's gonna work. And it does. And eventually, if people start realizing how much we're printing, and I feel like the faith could be lost, and not just our dollar though, in a lot of dollars, a lot of fiat currencies.
I was just going to say, well, it also brings into the question
Like,
into
even
thought
the yen
how
is way
much,
worse.
yeah,
Not the
how
yen,
much foreign governments
Japanese
are
yen, the
printing,
Japanese yen. Yeah,
yeah, are how much foreign governments are printing in this time. So eurozone governments are printing. I don't know if it's at the rate. Truly, I don't know if it's at the rate that the
yeah. I don't know. I
U.S.
don't
is.
really. They were printing a lot, but I don't know if
Yeah,
it's. I think we passed them, honestly.
I would say so.
Yeah, but the yen, Japanese yen, they print like crazy amounts. Their debt is like 116% of their GDP.
Mhm.
So like,
Whereas,
so we have where our debt is oh, or maybe it's their nah, you know what it is? It's their central bank's balance sheet is 116% of their GDP. So we can figure out what our percentage is, but I know it's not 100. It's not even close to 100. Like
the U.S. debt to GDP in 2020 was 82%.
Yeah, I don't think we're talking about that. Look up central bank balance sheet to GDP. Yeah, here we go. Yeah.
Central
So
bank
in
assets to
2018,
GDP.
2018 is when it happens. The Bank of Japan's balance sheet is now larger than the country's GDP. So that I don't think that could ever happen in the United States. I don't think that could happen. I think people would honestly lose faith in the dollar. But it definitely shows that we have more room to run, I think, because Japan is obviously a very modernized country. But that's why yeah, I'm sure you know people that have gone to Japan, they come back and they're totally in love with it. They talk about how it's so modern and this and that, yada, yada, yada. But they don't realize that it's all fluff. Their central bank printed it all. They made it which at
And
the
they
end of the
were
day, it's
they
some,
were
I guess
the
it works,
first central bank to go to negative rates.
Exactly.
Yeah.
They have a lot of problems over there at the end of the day when it comes to their central bank and the banking system.
And they have for years. I mean, prior to the pandemic, Europe was kind of teetering on the brink. It was kind of in the foresight that within the next year or two they were going to have some real troubles in terms of their central banking, their rates, and what was going on with the euro and everything. But Japan was already full in it. I mean, they had already had very very large struggles with their central bank. They went to negative rates before the pandemic, actually, I believe, and kind of led the way there. I'm going to show you the U.S. GDP or U.S. Central bank assets
Bank
to
balance sheet.
GDP, and see what you think on that, because it's quite a chart. Can you
It's
see
quite a
that?
chart. Oh yeah, that is quite a chart. You'll love to see that, don't you?
Yeah. So
You hate to see that. But can
flat,
you get
flat,
up?
flat, flat, flat,
They don't
and
have anything
printer
for 2019 yet.
printer goes burr. No, it only goes out to 17 here.
Yeah, but yeah, the printer goes burr. Look at that, all the way up to freaking 22.5%.
Yeah. Yeah.
Printer go burr. No, it's definitely much higher than that now. I can tell you that.
Yeah. And that was after the last, after 2008 in
The first
QE.
quantitative easing.
Yeah. Yeah. And furthering that, I mean, with this one, this was the 2008 QE on steroids, and it
Yeah,
continues to
you
be
just really
in with no end in sight, really.
you just shook me with that chart. I'm not even gonna lie. You shook me to my bones.
It's I mean, it's
That's what
incredible
I
that
mean. Like
I
that's what
mean,
I really
flat,
mean
flat, flat, and
is
stark.
how do I don't understand, which I kind of do understand how our major our financial, our banking system, how they don't have a problem with this. But at the same time, I do understand how they don't, because they're making record trading revenues. They're making record revenues, and they're gonna position themselves that if the dollar falls, they're gonna be fine. But
Because
I
markets are
just
going to be fine, and they're in the markets.
yeah,
Well, for everyday people, and you talk about uh, saving and saving money,
the savers of
the
America.
savers, and not the big investment banks, or what any bank is really investing now in some
Yeah,
capacity, and that's how they're staying alive, because there's no yield or no money for them to be made in lending money, because it's so accessible, and just increasingly by the day. I mean, 120 billion in capital a day becoming accessible to Americans.
yeah,
So I guess it shows a stark difference in terms of central banking as soon as that the 2008 crisis hit, and it's only expanded as this crisis has hit. It kind of shifted from as soon as rates hit those low levels, and as soon as they opened the discount window in 2008, it really shifted the entire complexity of central banking, and how our currency works in conjunction uh, with central banking, in terms of real assets, I guess.
I mean, there's definitely some people that would make the argument, people that were around, before us, that when we came off the gold standard was the end of the free market, which I don't know. I feel like we wouldn't have had the tech bubble, things of that nature, if it really wasn't a free market. But we're definitely we're on that tipping point of we need to make a decision as a country that My computer's about to restart. No, we cannot have that. But we need to make a decision as a country of where we need to go forward with this, because eventually we're gonna, now, like how we were saying, the savers. Now, of course, just because the average person saves doesn't mean everyone should save. Everyone should be buying assets so that they don't get screwed in this
Mhm.
situation.
Mhm.
But as a country as a whole, we need to decide which way we're going to go, because either the people need to be informed on how to not get screwed, or we need to make the decision where we're, all right, we're going to chill out, because eventually someone's taking the hit for this. Eventually, either we blow up or we slow it down. And when we slow it down, there's going to be hell to pay. Those people are going to have to, whoever gets slowed down on is getting screwed somewhere, whether you're the person, either we're speeding it up and you're the person holding cash and you're getting screwed,
Mhm.
or we're slowing it down and you're the person holding paper assets and you're getting screwed. So
Mhm.
who do you think is really going to get screwed at the end of the day?
Now,
Not the top, not the
explain
people
that
at the
for explain the difference there for people, because when you say cash and then paper assets, they're thinking, well, paper assets is cash. So
Okay,
explain
yeah. So I'm talking about the average American holding in their savings account cash.
Mhm.
So like cash in their savings account. That's cash. It doesn't matter, even though it's technically in the bank, same thing. Now, when I'm talking paper assets, I mean something you buy with that cash that's not real, as in like stocks are real, but they're not. It's a piece of
It's a
paper
piece
that's
of
worth
paper on a
money.
sheet.
Exactly. So it's a paper asset.
Yeah.
So the people that hold paper assets, in the case if we keep printing, they're gonna do just fine. Those values are just gonna increase because it's gonna be more dollars to pay for that paper. The paper is gonna get more expensive.
Yep.
Now, if we stop printing, we decide we have to bite the bullet.
Mhm.
Now, those savers are going to be rewarded with the restricted flow of dollars and the decrease of monetary supply. But those people that own paper assets, or even non-paper assets at that point, real estate, gold, anything, just at that point, the dollar is going to win, at
Anything
least
that
for a
you
little
can
bit.
anything that you can physically touch and hold is really what you're speaking of in that sense. So
Yeah. Assets in general will decrease when we stop printing. Every asset.
every asset. Well, I
Except the
I don't know
dollar.
about. I think physical assets will increase when we slow. And I'm excluding real estate, because real estate is another one. Yes, it's a physical asset, but
I
it's
think real
also
estate's going
something.
down with it.
That's what I mean.
Not
Also
not as
something.
bad as '08, but
No, but it's also something that you need capital, or increasing
yeah.
capital continue to increase the price of real estate. And
It's
it's
kind of
one
like the
reason that,
stock market. You need the inflow to keep it going. Like the game needs to keep rolling.
yeah. And it's what is it, the Big Short? It's actually or no, it wasn't the Big Short. It was what's the other one? But he says, I got my hand on the scale, and as soon as I take it off, everything goes to fucking shit. And that's
Yeah.
exactly right. You have to keep your hand on the scale and keep pumping that money in, and that's what the Federal Reserve has essentially come to in Jerome at this point. And the second they take that hand off, all goes to shit. And so while everybody's sitting here and I
Not
guess
even
the
take
people
the hand.
involved
I
in the
mean,
market are saying, well, we need to slow this down. We need to slow this down. We need to, we got to. This is getting to risky territory. Is already in risky territory. Are going to be kicking themselves when the Fed actually does take their hand off the trigger, and everything crumbles around it. So it's kind of a happy medium that and it's something I think that Jerome's kind of trying to figure out now that printing has really become his sole and main driver behind monetary policy.
I mean, there's nothing much more he can do, honestly, at this point. The rates are so low.
Printing is all he's got is basically what I mean. But he has to find a
Yeah.
balance of how can I continue to print and keep markets stable while not overdoing it and causing real turmoil 10, 15, 20 years down the road.
Yeah, I mean, in reality, he shouldn't be worrying about markets, but he clearly does. He clearly does. The
I
dude
agree.
pops on the printer every single time we have a red day.
Yeah, and speak to that a little bit. So, I mean, traditionally and historically, the Fed has
Been here
been
to
there
establish
to
full employment,
full employment,
keep the
inflation,
dollar stable at
consistency,
2%. Yeah.
real
And
economy stuff. They're worried about the real economy and not the markets.
yeah, and especially back in the day, buying bonds was actually buying and selling bonds was actually a useful monetary tool.
it was
And
much more impactful when
yeah,
levels were
like
at.
for example, let's just say, now I don't know if these numbers hold true or anything, but this is just for the example. Let's say 20 years ago, the Fed would sell, well, no, they'd buy a quick 100 million worth of bonds, and the 100 million that they injected into the banking system would return like 200 million in GDP. You know, there was a multiplier effect,
Mhm.
and that multiplier has just fallen so low, and that's even with that's even with the printing. The multiplier is not what it used to be.
No.
It's
I mean,
for every dollar they're putting out there, are they getting a dollar back? I don't know. I hope so. If they're not, then we have a major problem. Major.
they're not getting much more than $1 back. If they are getting that dollar back
Well,
is
it's not them
certain.
necessarily getting the dollar back, but I'm saying
No,
for what they put out, they better be getting more than a dollar worth of GDP.
GDP. Yeah.
Yeah.
And it's questionable as to whether or not that's the case
Oh,
right now.
it is questionable. And that's a scary thought, kind of, honestly. That at that point, we're physically just wasting money to waste money.
Literally just printing it to print it, and it comes a point, and it's going to be interesting when, and there are some things that are experiencing some inflation at this point, but nobody's really talking about it, or it hasn't really had too big of an impact. But when inflation kind of grows and becomes more widespread, that's when it's really going to bring in into, I guess, into effect the true state of what all this printing has done to the economy. Because just because there's more capital out there doesn't mean it's going to, it's still going less than what, or going,
Yeah.
or going to
It's
get
not
you
necessarily,
less than what it was
yeah.
at one point. And
It's not
daily.
necessarily a good thing that everyone has all this money now. At the end of the day, it's really not. It's not. Like, hold on. Speaking of that, let me pull this up real quick. A little screen share action. Oh, I can't.
Yeah, you can.
No, I can't.
I just said.
Oh, now I can. Now I can. So here, let's share this. This is Google Chrome. What we got going on here? Look at all this money. If you're an average man, look at the kids. They're cutting it up. They're playing with it. Like, if your average man is able to hold a wheelbarrow full of money like that, everything is just going to cost so much money.
Mm-hmm.
So much money.
Yep.
Like, they have a thing back when all this was going on. It's actually crazy. The people started buying gold coins, and like a small percent of the German population, and the people that didn't buy coins, they called them the no coiners. And all these people that bought gold coins basically bought up all the real estate in Germany at the height of the hyperinflation, because these people just they were fucked. They had no other option. So they were like, so say their house was 100,000 whatever they used, maybe francs, whatever they used at the time. It was 100,000 francs. They were only taking like $25,000 in gold pieces. Like, they were just getting raped by these people, but they needed the money because the hyperinflation was just so bad.
So explain hyper
So
also, because people don't know what that means.
hyperinflation is when inflation is literally moving at percentage points a day. Like, your money could literally be worth 50% of what it was the day before. And that's all just due to this printing. Like, if everybody started pulling their money out of stocks, for example, well, one, that would decrease asset prices, but still, if all of a sudden all this money was held in cash, physical cash that people were walking around and spending, it would be that would be some insane hyperinflation, like insane. I mean, some people will get killed on that coming down asset prices.
I'll pull up a chart because that and the reason for that was, and you see it around different world events that happen, that was because of World War. So people are seeing that, getting scared, pulling money out of equities, pulling money out of everything, holding it in cash. So I want to show you this chart.
A lot of it has to do to printing. Like, hyperinflation is not a natural occurrence in the world. It's like, if we were backed by gold, let's say, for example, hyperinflation couldn't be a thing. It couldn't. Like, Germany printed mad money after World War I to be able to pay down their debts. And they were printing, and hyperinflation hits, and like, it just happens. It happens out of nowhere. That's really like the crazy part about hyperinflation is, like, it's not there one day and the next day it's there.
It's too late by the
So
time it's there also.
yeah,
So
once it happens, it happens. You're done. Like you
yeah,
might as well just give up.
and this is a small kind of example of something of that nature, but this is,
This is the dollar
March.
index right here.
This is the US dollar index. This is March. So March 9th right there at the bottom. And this is everybody going, oh shit, we're getting locked down. We're going into a pandemic. I need cash, 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 cash. And what is it? 3 days, it jumps aggressively
Aggressive.
over those 3 or 4 days there.
And now we're
When
well
that
below that.
continues, when that continues, that's when you see hyperinflation. So when people continue to pull out, that's when you see the hyperinflation kind of take effect, I guess.
It's it's because of the printing though. It's because of the printing, and it's when the bubble bursts. Like it just it's wild the route we're on. Honestly, it's a scary route we're on. I really hope we don't see the day of hyperinflation, but at the same time, kind of like I said, I kind of hope we do because I'm positioning for it. So
Yeah.
if that's what I need to hit the black swan event, my big short where I cash out, then I guess is how it's got to be. I'll
Yeah, so
donate
I
some
guess
of the money to charity.
other than just, the general consensus of, oh, don't hold your money in US dollars or really any dollars or, yen, anything, really any currency, physical currency at this point. What other ways can you kind of proof yourself in your portfolio and in your
Well,
wealth in general
one like
to
I said, I like metal producers right now personally. I
Mhm.
think they outperformed in times of hyperinflation historically, and it sounds crazy, but history really repeats itself. And 1920, there's a stock crash of 1919 that no one talks about
Mhm.
because the market recovered so furiously afterwards.
Mhm.
And then we went into the roaring 20s. So I don't know. And Golds, and like I said, Barrick Golds, which is still a company today, was the best performing asset of the 1920s. Now, are they going to do it again? I don't know. But I really feel like best play, if you want to stick with traditional outlets, be gold producers, mining companies, any type of physical asset.
Mhm.
Farmlands, like we've been speaking, the cheapest land possible because
Yep.
there's really not as much premium in farmland no matter where you go. So there's less of a chance of you losing a lot of money
Yep.
on your capital,
Yep.
if there is a crash. So,
Mhm.
farmland's a pretty safe bet. Honestly, I liked oil a lot lower. Now it's ripping up. I kind of wish oil would have been a move, no doubt, because at the end of the day, everyone was crazy when oil went negative.
Mhm.
Like we should have all known it was coming back hard
Slowly.
body.
Yeah.
Yeah, exactly. We should have known.
Yep.
And then for the more people, a little more risk of tolerant cryptocurrencies and stuff of that nature. Just
Mhm.
different plays. Diversify, 100% diversify, so that when it does hit the fan, because no matter what, when it hits the fan, there's still going to be winners. There's still going to be people
Always
making out
is.
like bandits. There's still going to be, and even if it's not the person shorting, there's still going to be positions to go long and make out like a bandit. So
Yeah. So
diversify, pick your spots correctly.
so when that hyperinflation theoretically was to hit, what does the US dollar index do per se? Up, down, flat?
Oh, it's going to be down, down, down bad. Everyone's going to be dumping US dollars at that point.
Mhm. But not dumping
But you
US
know who's
dollars
not
for
going to
other
be?
currencies. Every other currency is going to follow suit. They're all going to fall. It's going to be, like you said, the hard assets, the miners of the hard
Exactly. People
assets,
are going
things
to be
like that.
gold. People will be buying gold at that point then if that
Yep.
really happened. If the US ever went into hyperinflation to the
Yeah.
point of like Germany, yeah,
Mhm.
we'd be in some situation
Yeah.
like some other type of situation.
Never before seen. But it also, and that kind of goes
Like
along.
I don't think it gets that bad. I don't think it gets to
No,
that
no, no.
point because I think I hope we have enough checks in place and enough smart enough people there that are just at some point someone's gonna say, all right, it's time for me to be the asshole for the country to take the hit. Like I'm gonna be the one to take my hand off the wheel, let the
Mhm.
shit hit the fan, and then put my hand back on the wheel.
And that's something
Like,
that I don't think Jerome has ever. I think he's
no, he
always
doesn't have
been
the
the guy
nuts.
to play. Yeah, he's always been the guy to play for. I guess his reputation kind of thing. He doesn't want to be the guy who fucks it up. Doesn't want to be the guy who is looked at as, oh, he caused he caused that decline, or he caused that depression or recession, whatever it may be. Going back to the cryptos though, and it's something that we had kind of talked about or talked a little bit about, the idea of the cryptos being, in a sense, commodity like or physical assets. That because of the scarcity factor, they're not currencies like your US dollar or anything like that. You
Definitely
can't just
not. I mean,
continue. You can't. They are more the US dollar on the gold standard than they are the US dollar post gold standard, because as we know, post gold standard, once that decouples, you can never go back. Once that decoupling happened, you can never go back, because
yeah,
immediately
never.
you've got more dollars than you've got gold, and you can't just get rid of them. You can't get rid of them once they're there. So you can get rid of access to them, but they're still there. They're still there.
I 100% agree with you.
With that said, the cryptos are like the currency on the gold standard because of the scarcity, because of the fact that it's backed by, and it may not be backed by anything physical, but it's backed by a number that is a max. There's a max
there's a math behind it. There's an algorithm, there's a formula. It's all
not even, there is a definite endpoint or a definite maximum as to what.
yeah.
And some may say, well, gold you can continue to mine. It's not an indefinite asset. Gold. There is
Definitely
a hard
not. There's an
cap.
ending,
There's a
but
hard
we don't
cap
know
on
the
there.
hard cap.
We don't know what it is, but there is a hard cap, and thus we can judge it off the scarcity of
Definitely.
current supply and stuff like that. So I guess it backs crypto, and not specifically any cryptocurrency. I'm not going to go out there and put my self on the line and say this is one or that's the one. Bitcoin is the main one. It's the one in everybody's mouth right now, but it's definitely a viable spot to hold capital. We see firms holding hundreds of millions now, and increasing by the day. Getting that cash on their balance sheet is not cash in US dollars, and that doesn't mean it's not cash or liquid capital. It's still liquid. It's just held in Bitcoin per se, or held in something else that's not going to be affected by inflation, or not going to be affected by continued printing so much as the dollar is. And it's something that's kind of, I'm not even going to say it's a little bit safer for the companies, but in a sense, they can kind of they can see what's happening with that liquid capital, or what the real threats are, more than they can see it by just holding the US dollar in terms of liquid capital.
I definitely agree with that. And at the end of the day, people like talk about how like volatile Bitcoin is, which it is, but these companies aren't taking positions to swing trade them for 6 months.
Yeah.
These are companies that are taking positions as if this is a treasury, as if
and as they do that, the volatility, and as they do that, volatility will continue to decrease, because the float of Bitcoin is so small comparatively.
So small.
And
People don't
that's
get
why,
it.
Yeah, and that's why it is volatile, because big players make a few trades and it causes big swings. But as we see firms hold
Lock
Bitcoin,
they're
or
going to
pull
lock it
in,
up.
they're going to lock it in, take it off the float, which is going to decrease the float even more. But in doing
it's
so,
money that's never going to get sold out.
They're not selling it. Yeah, they're not selling it. They're only really buying it as they get more liquid capital and try to shift it out of the US dollar for now. So it does kind of breathe some extra legitimacy into the Bitcoin.
Now,
the big names and big firms pushing for it going forward.
How I said Mass Mutual took a $100 million position in Bitcoin. Well, they are. I don't know if they actually did it yet, but they definitely are. And so if all these companies like that, the major insurance players, the major banks, the major everything, right? Say they even put like 0.05 allocation. I read something of their assets towards Bitcoin. It's something like $4 or $5 trillion. That's like the resize. That's more. That's the Bitcoin market cap's only like 400 billion.
Yeah.
So
how does that? Because and it's my opinion. I don't know if it's your opinion or not, but I don't think that U.S. government, or really any government, is going to allow Bitcoin long term to take over the majority of I guess holdings, liquid holdings, or transactions, anything of that nature. That's why the U.S. government is such a large holder already of Bitcoin. I think it's going to shift to the U.S. government creating their own type of cryptocurrency. But how does that work? Because like we said, there's finite caps or definite caps on the availability of the cryptocurrencies that go on in blockchain right now,
So
whereas the
one,
U.S. government
I
card,
don't,
any government
I don't.
currencies pump out
The
unlimited.
U.S. government can't do anything about Bitcoin at all. At the end of the day, they can't do anything. If the people want it, the people want it, and that's the beautiful thing about it. They can make it illegal. They could say you can't hold it,
They would
but at
never
the
do
end of the
that.
day,
I'm saying more to the fact that when they create their own cryptocurrency, their own digital currency, how do they go
they're
about
gonna
it?
create a U.S. dollar. They're gonna create a U.S. dollar. It's gonna be 1-to-1. And Bitcoin will still be the digital gold. You know what I mean? It will be like
Because the
Bitcoin's here to
Bitcoin
stay.
has
Is what I'm
because
saying.
Bitcoin has the hard cap, whereas that. So
Yes.
how is it? How would it be designed? That's my question, because
How would it be designed? It would
you
be.
can't put you
They
can't put a
already
hard
have.
cap on U.S. dollars in terms of
Yeah,
the
they already
crypto.
have. They already have coins that aren't hard capped. They have plenty of coins that are not hard capped.
Okay.
That pay you. There's coins, for example, it's actually called the US dollar coin, like a
Mhm.
USDC, and it pays you. I'm gonna tell you right now. There's some places that pay you better, some places that pay you worse. But Coinbase right now, oh, it's paying 0.15% on that. But there's another coin, DAI, which is 1-to-1 with the dollar too, that pays 2%. So like there are coins that have built-in inflation, just like the US dollar, you know?
Mhm.
And personally, would I ever own a coin like that? No, because that's part of the reason why I believe in Bitcoin is because I believe in the scarcity. And I think personally, if the US government creates their own coin, let's say, and let's say people's literally like you get your paycheck and it's going to get sent to you in US dollar coin, like right into your wallet on your phone. Like imagine
Yep.
there was like a national wallet or some shit.
Yeah.
I think that would be a good thing for Bitcoin as long as the government doesn't outlaw. I mean, they could always outlaw it, but as long as the government doesn't outlaw it, all it's doing is creating more adoption because
It is
more
going
people will be used to.
that is going to be such a benefit for transaction heavy businesses also, because I mean, if you think so that their Starbucks app before Venmo and PayPal and things like that was the most used app for transactions. So they're kind of the pioneer of this. Instead of having to pay for swipe fees for everybody coming to their store and swiping their card, huge swipe fees associated with it, they make you think, oh, you're going to get some rewards, download the app, put your money on there. In reality, they're just eliminating their swipe fees by creating their own transaction process.
Yeah,
So all these businesses, as digital currencies become more prevalent and everything, are going to see such benefit and such cost reduction in terms of swipe fees per se that they have to take on.
payment
Uh,
processing. It's gonna hurt Visa,
mhm,
Mastercard. Well,
mhm.
actually, did you see? I think it was Visa. Visa has a coin. Not a coin. A card that they now it's a bank obviously that issues the card. It's not Visa, but it's a Visa card. But
Yep.
your rewards are paid to you in Bitcoin. So
Yes, I did
like
see that. So
these
that's
these
yeah.
payment processing companies are hopping on that wave. They do realize that they need to put a foot in that
Hmm.
area. They may not
Hmm.
be jumping on full board, but they're going to make sure they're in that sphere. So in case this does take off, that they could be a major player as well. I believe that.
Yeah, I agree.
And that I think banks are taking positions. I think banks have been taking positions in Bitcoin on the low for
Yeah,
years now. And they've
without a
been
doubt.
shooting it down, shooting it down, shooting it down. But they were like, you know what? We'll shoot it down all we want. And if this thing still pops, it's popping. Like we're good.
Yeah, not only that, but they also know uh, if they shoot it down, shoot it down, shoot it down, and they're buying at that point, and then they come out like they have in recent months and say, oh,
Bullish.
taking positions in Bitcoin, they're going to catch a big time pump and dump. All right, so let's kind of shift gears, I guess, and we've done a lot of talk on the dollar, and this will include some
A little bit of dollar
references
talk.
to a little bit of dollar stuff. But let's shift to the whole sports card market and something that's kind of gained both of our attention as of late, and a lot of big names' attention is kind of been drawn or focused here. And you've dabbled a little bit in the sports card market. I
Maybe
have
not
yet
winning, but
yet to dabble in, but uh, sports cards becoming ever more popular and
increasing in value in insane
increasing in
amounts.
value without a doubt. And there's some underlying factors that I have some opinions on.
Mhm.
What are your thoughts on the whole matter?
Now, it definitely has a lot to do, and I believe it will be a cycle as but it has to do with the people with the purchasing power right now.
Mhm.
People our parents' age, that I'm sure your dad used to have mad baseball cards back in the day, when he was growing up, whatnot, and I'm sure he used to trade cards as a kid. So I think a large portion of it has to do with the people of that age and the nostalgia. That I feel like that's what kicked it off. That's what really kicked it off, is what started bringing the cards from like a few dollars each to like into the $50 range, and
Mhm.
now people are spending 500, 1,000 a card,
Mhm.
and off the rip, like I've seen Zion Williams rookie cards going for a few $100s. Like
Mhm.
people are speculating in the market now.
Yeah, and I
It's
think it's a
another
lot
form
of
of speculation.
it is a lot of speculation, but I think it's also driven a lot by and you've dabbled with some of the couple $1,000 cards, $1,000 in that range. Uh, I guess I think where the real value is when you get up into like big cards, 25, 30 grand north, like big cards
It's
is
like
where you're really
anything.
gonna yeah,
Spend your money wisely,
is where you're
Like
gonna really find.
you're gonna pay the upfront premium, but at
Yeah.
least you're getting a good quality.
Mhm.
Like you're getting that 10 to 10 rookie, whatever player it is. It may have cost you 25 grand, but
Yeah. Yeah,
it's
and
the
I
best
mean,
there is.
just in the past weekend, the first ever hockey card to ever sell for over $1 million, the Wayne Gretzky PSA 10 tops, sold for 1 point something, and then there was another Gretzky card that sold for close to $1 million. That was another PSA 10 Gretzky card,
That's
and
crazy to think
it
about.
is it is,
Someone
but
just got close to $3 million, right? Because you said 1 point. What was the first one
I think it was 2 points, 2.2 or
altogether?
2.3, yeah, altogether. It was just
Still
over a million, a
crazy,
little under a million. Yeah,
craziness.
crazy. I think where a lot of that is coming from, though, and there is some real value, and these are valuable things, but you're seeing funds, things like that. It's unregulated, which has one major thing to do with it, but also
For
you're
sure.
finding funds that are going out and let's think about what was the Michael Jordan, The Last Dance. That's what it's called, right? That
Hmm.
that came out.
Yeah.
So The Last Dance goes through a
Jordan
couple of
sneakers prices.
no. Jordan
Uh,
Jordan cards at the beginning of that were X price. Let's say I think there was one that was $100,000 card. Uh, end of that The Last Dance. By the end of it, those cards were going for 250, $300,000
mhm.
at the end of it, and it's people. There
I
was
believe it.
one case in which I think the card was listed for 210, something like that, and a fund came in. They said, "Listen, we're just going to buy it. We're going to give you 400,000 for it." So they bought. It was 210. They could have put a bid in for 220. They threw it in. They said, "Screw that. We're going to buy it for 400." And what they did, they boom, the whole market just pumped up. They were probably holding 10 other cards on the back end that they had gotten for less than 200. All those cards are worth tons more now. And they
Yeah.
know we hold these for 10 years. Our 400,000 is going to be two, $3 million.
800. Yeah, at
Oh,
least.
way north of that. What? Yeah, two,
You're
three
hitting the
million
double at least.
at minimum, a double. And there's it's even gotten to the point where you can buy it's like a mutual fund. You can buy shares of XYZ, PSA 10 Michael Jordan card. You can buy shares of
Hmm.
the Topps PSA 10 Mike Trout card, or whatever it may be. So as the
Now, see,
access to normal people grows for the bigger cards, those are going to continue to pump up too. And as you continue to see the big numbers, it's just going to only continue the cycle and get the cards more in people's mouth, and it's just going to continue to go around the cycle and raise these cards over the next 5, 10, 15 years.
yeah, and a lot of it though too. It has to do with, bro, everything, like the printing. At the end of the day, there's just so much more capital or to go around that people are like. At the end of the day, like someone like 25 years ago, whoever bought the Jordan, like PBD for example, he bought the Wayne Gretzky card. What did he spend on it? Like 500,000, something like that.
I think he spent 500 for both of them, so he got both of them for 500.
Okay, so yeah, so he wrote that check for 500,000, right? Let's say that was like 30, 40 years ago. Like, I really don't think there would have been someone that now there's people that could have afforded it, definitely. But I don't think there's just so much more capital flow now that there's a lot bigger market for everything. And like
A lot. Oh,
the numbers sound bigger, but
yeah.
they're not. And this is where I'm gonna break out the Warren Buffett. Warren Buffett at 20 years old, he made $20,000, the equivalent in our day of $55,000.
Mhm.
That is insane.
Yeah.
That back in the day, you can make $20,000 and be living good,
Mhm.
very good.
Yeah, and I'm going to push back on it a little bit because obviously the inflation does have something to do with it. But if you think about what sports was back then versus what sports is now,
Definitely a bigger
the
industry.
level of the level of icon that a big sports figure is so much bigger. The level of money they're getting paid is so much bigger. The level of money in the industry is so much bigger that they've just become so much more uh, iconic, I guess is really the word. Back then, your Honus Wagner card, yeah, it's a cool card, but people really thought of it as, oh, this is a trading card. It's a cool thing to have. It's like a picture on the wall or whatever, or, signed football from whoever it may be. Now, it's a completely different idea, and that the whole idea of what it is has changed, and it
Well, yeah, even
goes
look at
back to
sneakers. Look at
Bitcoin and
sneakers.
stuff like that. Another thing, sneakers, great point. As the
There's always
industry has
been,
become so
yeah.
much bigger, then these things have become so much more iconic, so much more
Mhm.
valuable uh, uh, in the root of them.
There's people that put $20,000, $30,000 into shoes like 15 years ago. People were calling them crazy.
Yeah,
And these mans cashed out. They have literally $1 million garages full of shoes. And
full of shoes. Yeah.
it's like, damn, good for you. Like
Hmm.
you bet it, you latched on, you bet it big and you won.
Yeah. Yeah. Yeah.
And
Like you
that's on
said.
something that like I respect stuff. Those are the type of alternative assets, art, shoes, watches,
Hmm.
cars. When you're starting hitting it big on those too, like you're a pro. That's next level. It's like, all right, I'm gonna buy an item. Every item in my life I'm buying, I'm gonna make a return on. Every
Hmm.
item I buy.
Hmm. No, and that's exactly it. It's yeah. I mean, are these cards cool to have? Of course they are. You love having that card and,
You
and
love to
being able
show
to
it
go
off.
and,
You love
and
to be
you
able
love to
to
show it.
do
You love to
dinner
just go look
party.
at it, see it. Hey, I got this. But it really is knowing I love this card, but it's a valuable piece. It's a good talking point, but it's also got real value that I'm gonna make return on.
That I'm gonna
And
unlock one day.
yeah, I mean, buy and hold, you're gonna do great, but you can also go out there and find the right deals on cards, just like you can find the right deals on real estate, or you can find the right deals on whatever it may
Exactly.
be. That's a hard asset.
That's one of those beautiful things about those type of markets. It's not controlled by these high frequency traders that
Mhm.
these quants and the algorithms. Like it's hard to find a deal in a market like that where it's just the arbitrage is going on and the whole nine. It's hard to find a deal. But in a market that's actually conducted buyer to seller,
Mhm.
definitely a lot more um market breaks and inconsistencies where you could find good value. Like
No,
on
that's
the
it.
spot,
There's
instantly
very
buy and make
little
value.
there's very little arbitrage opportunity in terms of like financial markets and stuff. And like you said, because of quants, because of automatic trading and algorithmic trading, things like that. And it goes to the point we've talked about it before about nobody makes money trading intramarket. It's overnight where all gains are 90-95% of gains made
Over
in
the
the
past like 10 years.
are made overnight in overnight trading. Uh, that's not the case with things like the card market and different things like that. You can actually go out there, do your research, find arbitrage, buy it for a deal, and go ahead and sell it. The same thing with
Sell it the
uh,
next
with
day. Like
with houses. Yeah. So and it comes to a lot of times. Uh, you mentioned the PBD, and that's who had the hockey cards. He got a deal for it because a guy came to him and said, "Listen, these cards will probably go for 800 total on auction, maybe north, but I don't have the time or the desire to wait 8 or 9 months to go through the entire auction process. So if you can give me 500 cash, like wire it to me tomorrow, cards are yours, $300,000 discount at minimum." Great deal. You're going to be able to do it. You can find the same thing in real estate. Whereas, a real
mhm.
estate guy with a portfolio needs some liquidity. Maybe he found another opportunity that he really wants to jump on, doesn't have the capital. So he's going to give you a deal on something, or you can go and find a deal from somebody like that. Whereas in the markets, you're not going to be able to go out there and go, well, there's XYZ float in Apple stock. Let me go see if Johnny Hot Take is going to be able to sell it to me for
Yeah.
10,
You're
12,
you're not
15
calling up your buddy and being like, sell me your shares of Apple personally for
for
10% less.
yeah. I mean, the guy would hang the phone up in an instant. But whereas the card market, it's much more negotiable, and you can
Mhm.
find you
It's
can
more
find
illiquid
deals.
at the end of the
It
day.
is, it is, it
So
is,
so
and
when you start playing with more illiquid assets,
Mhm.
you're definitely taking a risk, because if no one wants to buy it, no one wants to buy it. You may have
Mhm.
spent 500,000, but in reality, it's at a zero market price at that point if no one wants to buy it.
Yeah, and there's no interim cash flows that you're gaining from
Yeah,
holding it or anything like that.
definitely.
Where there would be for real estate in some senses. But I mean, if you talk about what 17 months that those Gretzky cards were held from 500,000 to over 2 million. I mean, if you can make a 1.5, 1.8 million in 17 months off 500,000,
You're hyped.
yeah, if you can do that consistently, you're going to be very wealthy. You know what I mean?
Very wealthy.
In any scale. So the return is there. It's just in principal return and not in interim cash flows. But
Mhm.
you're going to give up liquidity to get those principal returns, but they're going to be substantial. If you buy the higher end cards, the bigger cards, the good cards, you can probably find yourself and because of the liquidity, you're going to and that's probably where you may have gone wrong a little bit in terms of those. If I'm buying $1,000 card, yeah, in a couple of years it's probably going to be worth 2 or 3,000, but the liquidity for $1,000 card is much different than the liquidity for a 40,000, 50,000, $1,000,000
Or
card.
even
Where
on the lower end, the liquidity picks up on the lower end too, I would say. Definitely.
it
There's
does,
definitely way more buyers over a
yeah,
stupid $3
yeah,
card than there is
mhm,
for the 1,000. And like you said, there's definitely a bigger market for those $500,000 cards than there are for
mhm, mhm.
that little small range,
And
that in between.
a lot of what it comes down to is the people that know these cards and are actively going out there and trying to buy these cards. They have capital, so they're not looking for those $1,000, 2,000, 3,000, 5,000, $10,000 cards. They're looking for the big hitter cards that they can buy, hold for 15, 17, whatever months it is, 18 months, flip and double, and then do it again, and then do it again, and do it with multiple cards at a time. So uh, it's risky to try and try your hand with the middle of the road cards, but the higher
It's
end
like
cards are
anything.
yeah,
It's
yeah,
like
yeah.
anything. There's risk. There's risk in all. So,
No, and it's along the same sense. And if you talk to guys who have built big real estate
I think I'll sell those cards
portfolios,
eventually.
yeah, you will. And it's something that, like I said, guys who've built big real estate portfolios, if you talk to them and you say, well, listen, I'm looking for a 5 unit or I got this 5 unit, 6 unit, whatever it may be, they're going to look at you and go, bro, if you're looking to really make money, you need to buy 30, 40, 50, 60, 100 units that are cash flowing. And that's when you're really building a portfolio. You might do all right on that 5, 6 unit, or you're going to take some interim cash flow on the interim. But if you're going to be a real player and make real return, you're looking to buy 60, 80, 100, 120 units north of that, because that's really where the real money is to be made.
No doubt. But in that aspect though, I have to say, I think there's plenty of people who are plenty of wealthy off of owning a few 3, 4 unit houses that they rent out. And I'm talking like plenty of wealthy. Their net worth is well over 5 million. They chill, they work their job, and they just collect rent. And that's not bad for a lot of people. That's really not. The
No.
average person, if they just locked on and just focused,
Mhm,
they could lock on to a building like that, or any type of building, 6 person, 7 person, and
mhm.
that would be perfectly fine. Now, I agree with you in the aspect, if you want to be that $100 million player, or you want to be a billionaire with that multi-$100 million real estate portfolio, yeah, you better latch on and get ready to go for the ride. But with that
There's
comes,
also there's also a sense whereas if you can get that, if you can buy a deal for the 5, 6 uniter, you can quickly move up into the 30 unit or 40 unit or 50
definitely.
uniter. Uh,
I think real estate is like we were saying. You can find deals. Like
yeah,
sometimes even if it is only a 5 or 6, you might just see the steal. You just like, damn, I'm gonna buy that and flip that in only a year. I'm not even gonna
yeah.
hold it.
But you're buying the deal. You're not buying the property. And
Yeah,
you gotta
exactly.
love you gotta love the
Mhm.
property. I think, in my opinion, to go ahead and buy it. But you're really buying the deal. You're not buying the
Yeah.
actual property.
No, I agree with that 100%. Whereas if you were buying the property, you would be buying it and looking to long term hold and make cash flow off it.
Yeah. Yep.
Honestly, though, real estate is pretty wild. I'm interested to see where we go with that, with the tax laws revolving real estate
Uh,
after
in what term?
this whole. Well, because everyone's real pissed about Trump's taxes and whatnot. Still, like no
Mhm.
doubt, like there's still people livid, even though Exactly. Just play the
His
game.
personal returns.
Yeah. Just play the game. Just do your thing. And there's plenty of people just like Trump that pay zero tax because they have $1 billion in real estate debt.
Say 95% of people with real estate portfolio are paying minimum
Zero tax.
Yeah.
Yeah. So I'm gonna be curious if that's somewhere that they bring the tax laws. Honestly though, the way this whole I don't know, did you see that shit? Black Lives Matter has called Biden like multiple times now to like sit down and discuss. And at first he wasn't even sitting down with them. Then he finally got on the phone call with them, and the leaders of Black Lives Matter came out and said that he was just rambling on about defunding the police, which they never even asked him about, and sounded like rude and arrogant and all this stuff.
Yeah, I did. So, I didn't really see that or the context behind it, and that was probably the context behind it. But I did see it was just like a headline that I read that was a quote, and it was Biden says, "quote We're getting fucking killed by the defund the police ideas," or something of that, or something of that nature. That came out.
That's really as he might come in there and just be not anything that this man said he was gonna be. He might. He's gonna be. I feel like we might just get a normal,
He's a centrist. He's a centrist.
Yeah, he's gonna be just a classic, elitist dude. He's gonna fucking suck off Wall Street. He's gonna make sure the top 1% get their breaks. Like at the end of the day, he might come out and try to tight fist on something to like say he did something, but
I would say this is the Obama administration a little bit more center. It's going to be a spitting image, only a little more center.
And honestly, as long foreign security wise and all that, we're not going to be in good shape. I agree with you on that. I don't like that.
I don't even necessarily think that. I
think people are going to be looking to bully us a little bit more.
In terms of China, without a doubt, that's the real risk. That's the big risk. But if we're talking about other things, Trump was in one thing that I disagreed. I've said it before: pulling people out of Afghanistan, pulling people out of Iraq, pulling our troops out of Syria. If you were to ask any 95% of our troops and Tulsi Gabbard not being counted because she's
being counted,
she's completely the opposite of the majority, but almost every other military or soldier, they all want to be there. They would say, this is what I signed up for. I want to be there, maintaining stability. Yeah, maintaining stability. And I think that Biden is for whatever reason it may be, he's going to be keeping people. He's already said he's keeping people.
I was going to say
he's probably going to put numbers up in Afghanistan, into Iraq, and I'm in agreement with that. By and large,
I am too.
So from that type of security standpoint, I think we're going to be just fine. But I also agree from a non-physical standpoint, not in terms of
non-physical, exactly,
actual combat or anything of that nature.
The negotiation table.
And we've talked a little bit about it, but I mean, how do you see, especially, and I sent you that video. We didn't put it up or anything, but Chinese professor or whatever talking about all this dirt that they had on Biden. This, when he sits down at the negotiation table, it's going to go basically like this. We know, right? And Joe's going to go, what? We know. They're not even going to have to tell him what they know. They're just going to, we know. And he's going to go, you're right. What do you want?
Honestly, I don't know if it's going to work like that.
How does he have any negotiation?
How do they have any negotiating power?
Because they know.
But if they know, but they haven't crushed them yet. I'm not worried in that aspect. I'm more worried in the aspect of China coming in and disrespecting what we've gotten done over the past 4 years when it comes to these trade deals and whatnot, and China just getting back on the shit that they were on before, where we're paying huge tariffs to import our goods to them while all their stuff's coming over here for free.
Well, that's what I mean. I'm saying that they're gonna do that by just saying, listen, basically we're gonna write the rules here for you, or we're gonna blow your whole shit up. So.
But like Biden's ship has been attacked so many times that like I don't think he cares. Like his son was
that there's a
disgrace. You know what I mean? Like
disgrace.
And like it's not that he doesn't care. Like I'm sure behind closed doors, Joe was like, you little asshole. He was like, Joe, you little aspect. Yeah, Joe went to Hunter and slapped him up once, and he was like, "You're a little prick, like getting me in trouble." So
Yeah.
I don't know. I feel like as of right now, I'm more optimistic than I was in November. I'm not even gonna front. I really am more optimistic.
Yeah.
And but where I am a little worried, and I feel like Biden might make his gut punch to the left, is I could see him coming after guns in some aspect. But it's part of the Constitution too,
Yeah.
so I don't really worry myself about that.
I was gonna say I'll be completely honest with you, and it's one of the biggest things from
I try
conservatives
not
and
to
the
worry
right.
about the federal government.
Well, not only that, but everybody likes to be up in arms and they're coming for your guns and this, that, and the other
Exactly.
thing. The reality of that is it's not feasible. It's
It
not
would
really
be so much
possible.
work.
It's not doable. It's the same thing as the Green New Deal or the same thing as phasing out the oil industry. It's something that he says that he knows can never be accomplished.
I mean, but the
It's
SAFE
gonna
Act worked.
pander to his base. The SAFE Act, there's
Don't get me wrong,
elements in
they
which
didn't
you can
they
put you
didn't
can
make
put
us
restrictions in, you can put this, that, and the other
Yeah.
in. But that's not saying we're fucking taking guns.
Oh
That's
yeah,
not
no doubt,
saying
no doubt.
we're eliminating the
never
sale of
They're never gonna show up at your door and say, "You
Mm-mm.
want a gun, hand that over," because that's just
because
not gonna work.
they know that they're going to be purchased either way.
Exactly, like
it's the same thing with the marijuana, where it's coming to the point where it's like these folks are buying this
more than just the
regardless.
marijuana. Oregon legalized it all. Crazy.
I mean, that's just incredible. Let's kind of shift back to the taxes a little bit though, because we've talked a little bit about it, but so many people billionaires moving all over. Oracle, what's his name there?
Warren Buffett.
No, he's not Oracle. Not the Oracle of Omaha. Oracle, the company. What's the guy's name? Larry Ellison. I'm sorry. Larry Ellison's moving to Texas now, and that's Oracle. That's California's, like, they are California. Yeah. He's out to Texas. Elon out to Texas. People going to Florida. You think about where do Gates and Bezos live? Washington. No state taxes there. So
yeah.
And it's kind of ironic that as soon as the Biden administration comes into camp, all these people are going, probably going to dip to where there's no state income taxes.
But it's not even just the state income tax. Like, these states make up revenues in other ways. Like, obviously they're not getting taxed on income, but like, for example, you go to the grocery store in New York, you buy your food, you're not getting taxed. Like, there's no tax.
Say that again. I'm sorry. I didn't check
there's no tax in the grocery store. I mean, there is on certain items, but for the majority, your normal food, there's no tax. Now, in other places, that's not true. Now, for another example, say you have two houses, right? Say me and you both live in Florida. You live in Florida for 8 months of the year, though. I live there for 6 months of the year. So technically, I'm a New York State resident. You're a Floridian resident.
Yep.
Now, my house, say we both own $1 million houses right next to each other, same square footage, everything. Your tax rate, property-wise, because they still pay property taxes, because you're a Floridian resident, can only increase at a max of like 3% a year. While other people, so like my grandma was saying, because she used to be a Floridian resident back in the day, that the person next to her she was only spending like $4,000 a year in taxes. Person next to her lived in New York like 2 more months than her. I was spending like 25, 30 grand in taxes.
Really? I was going to say 12 or 14.
Because it adds up over the years. Like, it compounds.
It does.
So,
it does.
And because the cap is like, the way it works is they have the cap at 3%, and the out-of-state residents have a cap of like 10%. So some years they're just getting hammered. When Florida needs to make up that budget shortfall, they're smacking those out-of-state residents.
Yeah.
So it makes
it's a two-sided thing, because
as they get more people, I feel like
they have to increase those property taxes, because
there's going to be there's going to be less out-of-staters overall, and that might not happen for years. It really might. It might take 10, 15 years for them to need to even get to that point. But it really had me thinking about all this the other day, because we were discussing everyone moving there, and then my grandma, because she's a snowbird, we were discussing Florida taxes and whatnot, and I didn't realize that about their property taxes. I was like, damn, I bet that's a large way that they pull in these revenues, because in reality, New York and Florida are not that much different in size, population-wise, and we run a fat deficit, and Florida doesn't. So I was trying to think about logistically why that is, and
and it's tough to
haven't figured it out yet. It has to do with spending, obviously. But
I was going to just say that it's interesting, because If you think about it, and I was going to say, well, um, Florida makes a lot of their Florida's able to work with that based on retirees going down there with larger chunks of change, and then conducting commerce, buying different things, whatever. Whereas New York is kind of supplementing that, but there's tons of spending that goes on in New York. So you wonder, why does Florida not need to tax aggressively in that manner, while New York has to tax aggressively? And just because there's a lot of retired assets down in Florida, qualified accounts, different things like that. There's
Now,
plenty
I'm
of,
pretty
there's
sure they
even more
tax.
money around New York in terms of that. So go ahead.
I'm pretty sure in Florida though too, they do tax you on your holdings. Like there is
What do
some
you mean?
type of tax on your holdings, like on your long-term holdings, like if you have
Like outside of capital gains, or
like out yeah, like outside of capital gains, like there's some type of like an alternative minimum tax. Florida tax. Hold on, I'm trying to think of the word for it.
the Florida AMT is computed by multiplying Florida alternative minimum taxable income by 3.3%. The tax due is whichever amount is greater, the regular Florida corporate income tax or Florida AMT. That doesn't really, Florida tax
No, because
on
my grandma, she gets a pension because she worked for Nassau Community College for years as a professor. So she gets a pension from that. And then she also has her like Morgan Stanley holdings.
Mm-hmm.
And they do get taxed on, I guess it's the income she's drawing from it. It's probably not just a fucking flat tax. That would make no sense. But she does get taxed on what she takes from that.
So
It's not an
reading up
income, but it's going to
a little
Florida.
bit here, it appears that it's an intangible personal property tax. So
So that's what I mean.
Annual tax on high dollar property you own, such as cars, boats, recreational vehicles, flat wheel vehicles. I don't know what the fuck a flat wheel vehicle is. Doesn't sound like a wheel, if you ask me.
Definitely sounds like something more like for those people that live in like Boca Raton with huge yachts,
Mm-hmm.
Not the average little fisherman in the Keys.
Mm-hmm.
But because that really just had me thinking about how there's got to be other ways that these states fund all this. So like maybe they don't spend as much money at the end of the day on social services, and I don't know. Like I haven't really looked into the numbers like that, but like you're saying, it really does make no sense how New York could fucking charge us all this money on income taxes, but yeah, we run this deficit, and either Florida spends less money significantly, or Florida has taxes in other places that we're not realizing that make up that shortfall compared to us.
Yeah, I mean, I do know that they have.
There's got to be something. There's got to be something,
They do have some of the highest property taxes in the country. So I mean, when you look at all the property in on Miami, so I got Lauderdale all the way up Jupiter, all that. There's large real estate values there. So the property taxes on those are definitely help. But to the same sense that, I mean, sales tax is only 6% in Florida. I think New York State, it's what, 8%, pretty close.
But like I was saying, there's a lot of things we don't get taxed on that they do.
Mm-hmm.
They definitely pay like their fair share in taxes. These people, no doubt. So either what I'm saying is either there's services that New York offers that they don't, or we're just being stupid and we should cut those services because clearly we don't need them. Like there's got to be somewhere.
There's definitely
got to be, yeah.
Large amounts of unnecessary services
but Florida is also
programs.
Florida's also a weird state in the fact that like there's just some crazy laws in Florida. Like, man, say me and you are brothers, right? We're at home and me and you started fist fighting, right? And your mom calls the police. One of you have to get arrested. That's a felony. Like there's literally some law in Florida that if they get called for domestic violence, like one of them has to go
It's
on
incredible.
the spot. So like, there's just some weird things like, and think about that. That could be like two 18-year-old kids should definitely have the restraint to chill out at some point. But like, sometimes you get into a brotherly fight and that could be the end of someone's life
Mhm,
in legal terms.
mhm.
While we're on these legal terms, did you see that person that Kim Kardashian was crying about?
Um,
It was
because he
because he
murdered
was getting
someone.
executed. He was getting executed last week.
Yeah,
Yes, because he murdered two people that he burned them alive in a trunk after kidnapping them. And we have a problem with killing him? Why?
yeah. Uh,
Crazy. Honestly, that kind of sickened me because at first I was like, I read what she posted. I was like, damn, imagine someone actually saying that to you. Like saying like I just want this to be over for my family, like quick and easy. Like I was like, damn, that guy, like, that's kind of sad. But then I read what he did, and it's like this man literally tortured two other human beings, lit them on fire, and we have an outcry of sympathy for him. I just I don't understand what the point our country's got into in that aspect.
yeah.
Like when did it come like time to protect the criminals more than your fellow man? Like at the end of the day, like it's what like at the end of the day, most people are inherently good. Like
Mhm.
99% of the people you walk by, good people. Like, so why are we gonna stand up for people like that as a
Yeah,
whole, as a nation, versus standing up for the common man? Like, it's just wild.
yeah.
2020, man, it's been a hell of a year. All
It
I can
has
say is
been.
I cannot wait for 2021.
I agree. Hopefully, it's a little bit better.
Yeah.
Uh, I guess we'll wrap it up with that. It's Wednesday, right? Yeah, Wednesday. So we'll be back
Yeah.
Friday with another one. Maybe a
We got
deep
to
dive
check the comments. We got
on
to check the
another.
comments on the last video and see if anyone's getting Venmo'd.
It's very true. Um, hopefully somebody's going to be a little bit of a winner.
Yeah.
But let us know what you think about the dollar and the
Mhm.
dollar outlook going forward. Are you holding cryptocurrencies? Are you holding physical gold? What are you holding? Comment down below and let us know. Also comment down below and let us know, what topics you want to see us cover in some coming weeks and coming episodes. We kind of got a little clickbaity there, I think, and just talking about some general things that were going on in the world, but there's so much to talk about for a while. But as we kind of shift now that the election's all wrapped up, the electoral college has been confirmed, this, that, and the other thing. We'll kind of shift to some more deep dives into specific topics and what it means for your money, your portfolio, your life, etc. So yeah, let us know down below, like, subscribe, and we'll be back on Friday.
See you guys
Closing
Friday.
remarks. There it is. All right.